What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills?
Okay, especially those that have been affected by heavy rains. This is already the second week. I didn't know. But how's things in the Visayas, guys? How's things in Mindanao? Is it sunny where you are? I think in Bohol it's still sunny here. All right, so 6:59. I think our prayer lead today is Jade. So, all right, Jade. Please go ahead and open today's session with a prayer.
Build confidence in communication.
Good evening, everyone.
All right, Jade.
Let us pray. In the name of the Father,
Please go ahead and
of
open
the Son, and
today's
of the
session
Holy
with
Spirit.
a prayer.
Amen.
Build confidence in communication.
Thank you for this evening, everyone, for the precious gift
All right,
of life.
Jade.
Let us pray. Thank you for giving us the
Please go
strength,
ahead and open
wisdom, and
today's session
opportunity
with
to be
a
here
prayer.
together tonight.
Build confidence
To
in
begin our session
communication.
for this evening, everyone, in our minds and open our
All right,
hearts.
Jade.
Let us pray so that we may learn, understand, and make the most of everything that will be shared with us. Guide us throughout this session and help us retain the knowledge and lessons that we can apply in our work and in our lives. We also ask you to bless our mentor, Chris, for his time, patience, and guidance. Continue to give him wisdom and strength as he shares his knowledge with us. Bless all of our classmates as well, and we may support, encourage, and learn from one another. May you guide us in everything we do tonight and keep us safe and blessed. All this we ask in the mighty name of Jesus Christ. Amen. In the name of the Father, and of the Son, and of the Holy Spirit.
All right, thank you, Jade. Once again, good evening, guys. I hope you're all okay. I know some parts of the Philippines are raining and could already be flooding at this point. So I hope you guys are all safe. Like usual, we are starting our session with a quiz. So the quiz, I'm sending out the link in the chat button right now. And if you can also look into your screens, I have already flashed the info in there. So feel free to use your mobile phone, use the QR code. And then I'm also going to paste the link into the chat box. All right. This is, I think, pretty easy quiz. So you guys can probably finish this at 7:15. All right, last 10 minutes, guys. All right, last 6 minutes, guys. All right, last 4 minutes. It's not so bad, huh? 74% accuracy. So good. You guys are getting the hang of it. Maybe you also have the weekend, so watch the recording. It's showing really good progress. Looks like Josh is topping the scoreboard, and he came in a little late. Nice. All right, last 3 minutes. We'll wrap it up. For those who came in late, a lot of perfect scores today. Nice. Some probably has problem with their connection. Some probably came in late. Rewatch at the speed of 1.5. Nice, Rowena. Can open cam tonight, Chris. Currently at work, but that's okay. Like King got 15, Robina 13. We really 80%. Way to go, guys. The answer explanation is a nice addition. Thank you. Yeah. I don't know if you guys are able to see also explanation if you got the incorrect answer. Does it show? Or only when you get the correct answer? Oh, it also shows? Nice. All right, we keep getting better. Right. All right, 74% accuracy. We're being consistent. How many are taking the quiz? 108. It's not so bad, huh? And we are 135 in the room right now. Where to access the link to the quiz? Venus, I think Venus just got access to the live class today. So that's okay, Venus. We only have 1 minute left for the quiz. You can participate starting tomorrow. I think it's better to show it after all questions have been answered already. What do you mean, the scores or the explanations, Paul? All right, so 1 more minute. All right, guys. Time's up. So 7:15 already. Let us finish today's quiz. Top 3, we have Josh, Sanchez. Christine is also coming on a really good spot at second place. Christine is one of our scholars. Good job, Christine. Looks like you're loving tax, huh? I've never seen you at the top when we were doing bookkeeping. So maybe tax is your preference after all. And then the third spot went to Josh Shane, another Josh. And then Oliver on the 4th, Francis on the 5th place. Good job, Francis. John on the 6th place. Nice. Tess on the 7th, 8th, Sikane, Early on the 9th place, and I don't know who's NB. NB on the 10th place. Good job, guys. So let's finish today's quiz. Student can join or continue after that. Okay, let's just end that. All right, good job again, everybody. And let us review the quiz. We ended up with 71% accuracy. Again, it's not so bad. 96% completed the quiz. A total of 108 participated. Good job. And now let's review the questions. Number 1, 81% accuracy. Is a joint return allowed when one spouse had no income and no deductions at all? Yes. So there's nothing that prevents a taxpayer or taxpayers from filing joint, even if there is no income on the other spouse's case. Okay, that's even better for them, right? Because they get a higher standard deduction. Number 2, this probably was confusing because it only got 41% accuracy. Question is, 2 spouses use different accounting methods and a second couple use different tax years. Who is blocked from MFJ? So the answer is only the couple with different tax years. So the other one, 2 spouses using different accounting methods, they can still file MFJ. Okay, but the one that is prevented from filing as MFJ is if they have different tax years. Tax years meaning one is calendar year and the other one is fiscal. So calendar year is if it starts in January 1st and ends in December 31st. Fiscal, that means it ends at any day in the year and ends in any day in the year as well. Okay. It may be confusing for those who do not necessarily have accounting background. That's pretty understandable, and don't worry about it. It's very rare. It's very rare for you to encounter taxpayers with different accounting methods and even different tax years. I have never encountered that even in my entire practice so far. So that's just purely academic. All right, number 3, one spouse files separately. Must the other do the same? So generally, that's a yes, unless that other spouse qualify for a head of household status, right? Number 4, a marriage is annulled, meaning it was not valid from the very beginning. So what must the individuals do? So because there's no marriage from the beginning, what the taxpayer can do is to amend prior open years as single or head of household. Is this also common? Not really. What's common in the US is divorce. Okay, so this question is, again, mostly academic. And if they're divorced, they don't need to amend prior years. Okay, because the divorce is effective on the year that the divorce was finalized. All right, number 5, a couple filed jointly and now want to file separately instead. What is the deadline? So their deadline is April 15, which is the filing deadline. If they file an extension, that could be extended for 6 months, and that would be, the new deadline would be October 15. Question number 6, a little too complex probably. A couple filed separately and now want to file jointly. So what applies? So what they can do is to amend the return within the past 3 years. Okay, that's their option. Okay, they may not need to if they don't want to, but amending their returns for the past 3 years can help them get a refund or lessen their tax obligation. Because again, married filing jointly has a higher standard deduction. It's not a must, but it's an option that they can do to benefit them in terms of minimizing their tax obligations. Number 7, a husband filing MFS itemizes his deductions. What must his wife do? So if the spouse itemizes, the other spouse must also itemize. Okay, so it goes the same way. Number 8, what is the gross income filing threshold for a married filing separately taxpayer? A lot of you or majority answered 5. Good job. You were listening from last session's discussion. This is also not very common, but this could come in an exam if you would consider taking the EA exam. Number 9, a wife filing MFS pays the property tax on the couple's jointly owned home from her own funds. So who can deduct it? So it's the wife. It's the wife who has the primary right to claim the property tax on her tax return if they are filing separately. Can the husband claim it? Yes, if they both agree. Okay. Number 10, a spouse dies in 2025. For which years is qualifying surviving spouse available? So it's available for the next 2 succeeding tax years. So in this case, that would be 2026 and 2027. All right, number 11, everybody did very well on this question. For a qualifying surviving spouse, which child in the home does not count? So that would be a foster child. Number 12, how does the tax law treat an adopted child? It is always as if it's the child is a taxpayer's own child. All right, good job, everybody. Number 13, for more than 50% household test, which insurance counts? So that would be property and not life insurance, because we already know when it comes to the 50% household test, it's the household expenses, not personal expenses. Okay, that would be your keyword there. Number 14, a parent does all the household cooking, cleaning, and repairs herself. How does that count toward the 50%? So the answer is not at all, because only cash or money out is counted. Okay, so if you're a parent and you're looking at considering all your efforts in supporting your dependent, that does not count. Efforts do not count, only money. Okay. And I've been asked about this a couple of times already by the taxpayer. When I was doing a consultation, and the taxpayer says, "Oh, I do all the support of this dependent, all the cleaning, all the household chores," and I had to say no, that does not count as support. Okay. And number 15, final question: which of these counts toward the more than 50% household maintenance test? Right. So it's only food consumed in the home amongst all the choices. So children's school fees, this is related to individual. Families' medical treatment, again, this is related to the person. And all the more family holiday abroad, that's not a support at all, not related to home maintenance. Okay. So I hope that as far as the 50% support test for head of household, that's already clear for you right now. Okay, so again, good job, 71%. For those who have not taken this quiz during the live, I think if you got access to Wayground, I think you can still take it, because I made this quiz available for retake. Okay, so only the quizzes that's been made available in the live session is also made available for retake. The quizzes that's in the Google Classroom is only available to take once. Okay. And before we proceed, let's take the next 5 minutes to make some announcements and maybe answer your questions or concerns. First announcement from my end would be related to questions. So Carm already sent out a message in our Telegram channel about the questions, and I completely agree with her. If we could just limit the questions to what the topic is or the current topic is, so that all others who are doing it for the first time is not going to be overwhelmed, and it's not going to be too much information for them. I'll also make a conscious effort to skip those questions. And if anybody questions or asks those questions in the chat, anyone who's probably knowledgeable and knows the answer, I would ask, or I would encourage you to refrain from answering, because that makes the chat box a little disorganized. Okay, so just refrain from asking those questions. If somebody asks a question and you know the answer, what I would say is just refrain from answering that question, because we have a Google sheet where we compile all questions anyway. So we can just go back, we can just refer to that Google sheet. All right, is everybody good with that? Again, we're just preventing those who are taking this for the first time to be overwhelmed with too much information. Okay, the problem with too much information is you retain nothing. Right? Okay. Second announcement would be reading materials. I already have that made available in Google Classroom. So for the individual module, all those PDFs are already made available. If you're seriously considering taking the EA exam, that's a really good material to read in advance. And some of those modules we would not be able to cover in our live session, because they do not apply. Okay, for example, the last topic there is estate taxation. We don't cover estate tax because it's another tax form. Okay, it's a form 1041. In this module, we're only covering 1040. Okay, but it's good to read those and understand, because that could help you if you are, again, seriously considering taking the enrolled agent exam. Number 3 on quizzes. So quizzes, Just to clarify, you can only take that once, and some others were suggesting about doing what do you call that? A summative test after one unit is done. So we'll also do that. Because a lot of the questions in the quiz, if you notice, these are testing your retention. Okay. So in the summative test, we're gonna test your understanding. Okay, no longer about not purely about retention anymore, but more of understanding. And then the scores, I noticed that some scores were not recorded in Google Classroom, although they have been reflected in Wayground. We apologize. I don't know what happened. It's probably a technical glitch on which, either of the platform. But if you can do us a favor, because we don't know who amongst, and if you put that in the chat, it may be buried by other chat from your classmates, so that we can attend to that. Can you please send us an email to support@Borderless account instead? Okay, and Marilu is going to get that manually encoded in the Google Classroom. Because, for example, there's one who messaged over the weekend. I think his name was Nico. I checked in Wayground. His score there was perfect score. But when I look at Google Classroom, it's blank. Okay. Again, I don't know what happened, and I don't think that Nico is alone in that experience. So if you guys, and I initially thought it was just a syncing issue, but it's not, because it's been more than 24 hours. Okay, and then finally, our top 10 for this week, for week 1. Their names are actually in the chat box, but I'm also flashing them on the screen. All right, our top notcher so far is Josh Sanchez. Good job, Josh. Almost perfect scores in all 3 quizzes so far. And then followed by Anne Aguilar. Good job, Anne. And then third is Gianni. How do you say your name? Am I saying it correctly, Gianni? It's like an Italian name, huh? Number 4th place goes to Barry Barron. That's a nice name. 5th place went to Jen. 5th place, they're actually tied. So Jen and Nap tied in the same spot. And then the rest of the 4 people tied on the 6th spot. 1, 2, 3, 4, 5. Yeah. So that's Jake, Jonathan, another Josh, Kwanka, and then Laika. Good job, guys. If you guys can give them a big round of applause. It's amazing. People are taking our quizzes seriously, and I love that. Because again, I'm also taking this course very seriously, guys. All right. I'm almost out of battery, so give me 1 second. All right, let me see what I can do about charging my, does it make a difference if I have a mic or not? Like, I'll try to turn off the mic and see if it's all good, because I don't have a slot for my charger anymore. Let me turn it off and see if the audio is still gonna be good. Can you guys check? Access. Oh my God. It's on. Is there a difference? A significant difference without the mic? Or just barely a difference? All right, all good. All right, so another 5 minutes just to go through the chat, okay? the explanation should be after because it blocks the momentum when answering. Okay, that's a good suggestion. We'll consider that. So that means after all the questions were answered, only then will you see the explanations. Is that right? I don't know if that's something that can be done right now, but I'll explore. Okay. Use the answer quiz, and upon answering what the grade ends, I want to apply. The session has ended. You should attend on time. Okay. Again, for those who did not get the scores for their quizzes, just email the support, okay? So that we can make sure that you're all attended to. Am I sharing my screen? Okay, hold on. Maybe not. All right. Sorry, the names of the top notchers were not shared on the screen. My bad. All right, so just for everyone's satisfaction, let me see if you can, let me know if you can see this. No, I can't. Let me stop sharing my screen. All right, you guys can see that on your screen. These are our top notchers. So again, congratulations, guys. And it's just the first week, okay? There's many more weeks that we will be together. So there's still time to steal the top places, okay? All right. So I don't seem to see any questions. Then we can probably proceed with today's presentation so that we can allot more time with question and answer also on the demonstration of how these things come alive in the tax software. Okay. So good evening again, everyone, and welcome to session 6. So just like that, we are on our 6th session. Last week, we built the client file. So we also settled the issue on residency and then chose a filing status. Tonight, we will answer 2 questions that sound simple but are not. So the questions are, does this person have to file at all? And exactly how much comes off before the tax is worked out? That talks about the standard deductions. I will warn you now, tonight is the most arithmetic heavy session of the week. You can try to write down the numbers, familiarize yourself with the number, but I do not encourage that you memorize them, okay? There are 3 drills, and I want you working every one of them on paper or on the tax return in your ProConnect tax software as we go along. Do not, I'm not sharing my screen again. What's wrong with my Zoom? Hold on a second. Oh, okay. All right, sorry about that, guys. So I was saying that there are going to be 3 drills, and I want you working every one of them. Do not just watch the numbers go past, okay? You learn here by doing. And by the end of tonight, you will know 6 figures by heart, and you will be able to tell any client in the world what being late actually would cost them. So being late in filing their tax returns. Because we're going to be talking about some penalties and interest in relation to late filing. Okay? You guys ready for it? All right. So quick recap of where the file stands. That means the working tax return that we have worked with so far. Because tonight we'll continue to use them as examples, okay? So far, we know that Sophia meets the substantial presence test, but she was a non-resident alien in January and February, so a joint return was blocked, and Marcus is not treated as married for head of household. We worked the 5 statuses in order of benefit, landed on head of household. We also attached Elena as a qualifying person so that Marcus can be a head of household, and proved it on page 1 of the form 1040. Line 12 read $23,625. So this $23,625 is the standard deduction that relates to Marcus because he is filing as head of household. And you see this on the tax return, okay? So, right, so hold on to that number because tonight you will find out where it comes from. And before that, a question we have been skipping. Does each of these people have to file at all? So Marcus, Elena, Sophia, Rosa, are they also going to be required to file even if they are on Marcus's return as dependents? So those questions we will also be answering tonight. So far, we have treated the Alvarez family as one file. Tonight, the family splits into 3 returns. Marcus on his head of household return, Rosa on her own, and Elena on her own as well. So 2 of those 3 will surprise you. Okay, and I'd like you to really focus your attention because I have experienced these things. Okay, so this actually happened in real practice. Okay. Right. So tonight's run sheet, and it is a tighter session than last week. I made it for 60 minutes or allotted 60 minutes, not 90. Block 1, we will estimate to spend 18 minutes on who must file. So that we'll talk about the 3 triggers, the household and the add back deductions. Then block 2, we'll talk about it for 14 minutes. We'll talk about the standard deduction, the 2025 amounts, the age 65, blindness, and the cap that applies to dependents. Now, block 3, about 20 minutes, we will do the ProConnect lab. So we'll put this into action so that you guys can again see how these actually work out in an actual tax software. All right. Deadlines, extensions, and penalties. We'll talk more about that tomorrow, along with spouse reliefs, which we're not able to cover in the first few days. All right, and there will be 2 check your understanding questions, and then the drills that we're going to be using or doing in ProConnect. All right, so that's our goal for today. We finish this in 60 minutes and then do a Q&A afterwards. All right, so everything tonight hands off a small set of figures. And I want you to learn the pattern rather than the table because the pattern is much easier to hold. $31,500. The basic standard deduction for married filing jointly and for qualifying surviving spouse. Okay, so 2 filing statuses share the same standard deduction. Okay, technically because qualifying surviving spouse is still considered married. Okay, now 23,625 would be for the head of a household, and notice that it sits exactly midway between the other 2. So 23 is midway between 31,500 and 15,750. Now 15,750 for single and married filing separately. So same with married filing jointly, there are two filing statuses that share the 15,750 standard deduction. And then we'll talk about the additional amounts. So you see there 1,600 where a spouse exists, and 2,000 where one does not. So this relates to blind taxpayers and taxpayers age 65 and above. So they get extra deduction on top of the standard. Okay. Now the 1,600 is only available if or 1,600 is the limit when the taxpayer has a spouse. Okay, so if they're married filing jointly or married filing separately, then the only available deduction if he's blind or above 65 is 1,600. Okay, but if that taxpayer is single, then and blind, he gets 2,000 on top of his standard deduction. Okay, and don't worry about it too much right now. We will cover that more extensively in the coming slides. Okay, all right. So must they file? That's a question that you see on the slide right now. We'll talk 3 triggers. Gross income above the threshold. So that's something that we need to look at. If their income is above the filing threshold, then they need to file. Another thing that trigger a filing of the return is the net earnings from self-employment of $400 or more, right? So even if there's no other income and there's only self-employment income, if that self-employment income amounted to $400 at least, then there is a filing requirement. Okay, so remember that amount. It's easy to miss, but you should not. Okay, or a dependent with gross income above the standard deduction or unearned income over $1,350. Okay, so if someone is a dependent and naturally he would file single, you may think that the standard deduction for that dependent is 15,750, but really not. Okay, it could be, but the rule, there's a specific rule for that, and you may be surprised. And it happens, so you need to be familiar with that. Now, how much comes off? The basic standard deduction by filing status plus an additional amount of for age 65 and for blindness, each counted separately and per person, unless the taxpayer itemizes. So so far you already know that there's 2 types of deductions on the return. There's standard deduction and there's itemized deduction. Okay, we'll talk more about that in the upcoming week because there's a dedicated subunit for itemized deductions. Okay, so now what if the return is late? So failure to file comes with it a 5% per month penalty, which is capped at 25%. Okay, so there is capping. I don't know with the BIR if we have capping, but as far as the IRS is concerned, if the interest or if the failure to file penalty has already reached 25% of the tax due, then it stops accruing. Okay, so what that means is if the tax obligation is 1,000, right? So 1,000, that when the return is not filed, it will accrue a 5% per month penalty up to 25%. So 25% of 1,000 is 250, correct? So that's the maximum penalty in relation to failure to file. Okay, so it cannot go beyond 1,000 or 250 because the tax due is only 1,000. And then another penalty is called failure to pay. Okay, so that it comes with 2 penalties: failure to file and then failure to pay. This one is a little smaller. It's only 0.5% per month, but it's also capped at 25%. Okay, so if it's been a long time that the taxpayer has not filed, then he would accrue the most would be 50% on top of what his supposed tax due is supposed to be. Okay, so if it's 1,000, the most that he will pay would be 1,500. Okay, so he cannot go beyond that. Make sense? Now, who must file? We'll talk about this for the next 20 minutes. So an individual must file a federal income tax return if any one of three things is true. So any one, these are not cumulative, and one is enough. Okay, so any of these three conditions, if any one is met, then the taxpayer will need to file a tax return. Okay, so we'll talk about number one, gross income. Trivia is it's pronounced as gross, not gross. Okay, gross. It's as if it's with a W. Okay, gross income is above the threshold for the taxpayer's filing status. That threshold generally equals the standard deduction, excluding any amount for blindness. Okay, so if you're a single taxpayer and your income is about 16,000, do you think that this taxpayer is required to file? So in a situation where the taxpayer is single and his income is 16,000, do you think that that taxpayer must file a tax return? What do you guys think? Good job. Yes, because the income has gone past the threshold for filing as a single individual, okay? Because the standard deduction for a single taxpayer is 15,750. Anything that goes beyond that, and the taxpayer is single, he must file, okay? 15,750. Anything beyond that, they're required to file, okay? Now, in cases where the taxpayer did not reach the threshold, but in that same year, they had foreign earned income that was excluded. There was also the sale of a principal residence. You know, when you sell a principal residence, you have either a 250,000 capital gain exclusion or 500,000. 250 is single, 500 if married. So that's usually excluded from the income because it's non-taxable. But in a case where it's for a filing threshold test, that has to be okay. So that means if the income of the taxpayer from a W-2 was only 10,000, but he had a capital gain from the sale of house of 250,000, then he has to file, okay? Although he may not have any tax, okay? Although he may not have any tax, but he is required to file because those excluded income is part of the filing threshold, okay? Now, trigger number two, net earnings from self-employment are $400 or more. So if the income is this amount, the taxpayer has to file, okay? And we will talk more about that as we go along. Remind me to show that to you in ProConnect so that I can very well, or I can better explain to you why, okay? Because you may wonder, why 400? Why is it too low, right? Why is it too low? Why did the IRS set the filing threshold for a self-income earner at 400? Why not 15,000? Why not 20,000? Why only 400? Even the $5 for married filing separately, you may wonder why. $5. And we'll also be explaining that to you in the upcoming slides. Okay. So net earning is income minus expenses. All right. Now, this one catches people constantly because it applies regardless of how total income is. Okay. So total income could be, 500,000, but if the expense was also almost amounting to that amount, netting a 400 net income, then that triggers filing. Okay. Now, a student who earned $300 from a summer job and $450 from freelance design must file, not because of income tax, but because of the self-employment tax on Schedule SE. So an example here was a student, right? The student earned from a summer job $300. That's an active income, right? So $300. And then she also has 450 from freelance design. The freelance design is self-employment, and that is reported on a Schedule C. That was 450. Total income of this student is only how much? 300 plus 450, 750. But she is required to file. Why? Again, because of the self-employment income that triggered it. Okay. So a little too academic, guys, but you have to be mindful this happens. Okay. This happens when you're answering question from a prospect client. This actually come about. Okay. Right. So, and it is Marcus's trigger because remember, Marcus is an IT contractor. He reports income on Schedule C. So we'll see about that later. Now, trigger number 3, the individual is a dependent. So that is listed on somebody else's tax return with more gross income than the standard deduction or with unearned income over $1,350. So that's a number that you need to be watchful for. If that dependent has 1,350 of unearned income, which is considered to be passive income, right? So interest, dividends, capital gains, those are passive income or also known as unearned income. If that amount to more than 1,350, then that dependent will need to file a tax return, okay? Do not forget that because again, this happens, right? I've seen this in my own practice. Okay, so that is Elena's trigger here in our case. Because Elena, in our example, she earned about 3,000, right, in passive income. And we will be working on that today. And 2 more reasons to file, even when no trigger is met. So even if these 3 triggers were not met, someone may file. And one example for that is one case is to recover a tax withheld on a pay. Okay, so imagine if a taxpayer earned say 10,000, okay, on a W-2, but the employer withheld 200 out of that W-2. Okay, so because that 10,000 is non-taxable because it's way less 15,750 standard deduction, the taxpayer will need to file a tax return to recover the $200 in a form of a refund. Okay. So if it has a withholding of $200, but it's not taxed on the entire income because the income is below the threshold, there would still need to be there's still need for that taxpayer to file a tax return to get the refund. Okay. No filing of tax return means no refund. Okay, you can only get a refund if you file a tax return. Copy? So that is why a lot of US taxpayers really file tax returns because a lot of them actually get refunds. Okay, and that's also one. That's why the business as a tax preparer is a really good business because most taxpayers they look for tax preparers early in the year because they want to file tax returns early so that they can also get their refunds early. Okay, so that is why there's a deluge of returns starting February because of refunds. Okay. All right, just give me 1 second, you guys. What time is it? It's 8. All right, so before we proceed to the next slide, let's have a quick water break, okay, for a couple of minutes. All right, actually for 5 minutes. Okay, so grab your water. Sorry, grab your water and maybe prepare some questions. Jot those down, and we'll come back to your questions before we end today's session. Okay. that. A married individual who files a separate return and whose spouse itemizes. Okay, so in that case, when one spouse itemizes, the other one has to itemize as well. Business tax filers such as partnership, estate, and trust, they're also not allowed to do standard deduction, as well as corporations. So, for example, Gary and Sarah Beers are married, but they file separately. Okay, Gary has an AGI, or an adjusted gross income, of 40,000 and 8,200 of itemized deductions. Okay, so take note, 8,200. The standard deduction is 15,750. Right? Now Sarah has an AGI of 30,000 and 15,000 of itemized deductions. Okay, so in this case, Sarah has exceeded the standard deduction for married filing separately filers. Okay, now they can elect to take the standard deduction of 15,750 each. Now, if they elect to itemize, Gary has 8,200 and Sarah has 17,200. If either Gary or Sarah chooses to itemize, the other is required to itemize. And in this case, Gary loses 7,750 of deduction. This was the answer to your question, Glenn. Right? So Gary is compelled to only deduct from his gross income 8,200 instead of 15,750 if his wife Sarah itemized her tax return. Okay, this one makes sense to you guys? Say yes if yes, no if no, maybe if 50-50. Nice, I like it. All right, this is very examinable scenario. Okay, so you have to remember this. It doesn't happen all the time, but it does. Okay, and it's a situation that can be asked in an EA exam. All right, so now next slide, the gross income threshold. The general rule is that the threshold amount is a standard deduction, excluding any amount for being blind. Now, two exceptions. Exception 1, married filing separately. The threshold is $5. Okay, remember that. For married filing separately, the filing threshold is $5, not 15,750. So, and the reason is in the third bullet. Married filing separately, taxpayers are not allowed to include the standard deduction in the threshold computation, because if one taxpayer itemizes, the other is required to itemize. So you cannot assume a standard deduction exists at all. Okay, so just because they're married filing separately, you would assume that the standard deduction is 15,750. That is no longer correct. Again, because if the spouse itemized, then the other has to itemize as well. It's no longer 15,750. That's the filing threshold of the other spouse. Okay, it's whatever he earns on top of the $5. Okay, so practically it means almost every married filing separately, taxpayer with any income must file, because it's rare that any taxpayer would earn less than 5. Okay. Now, exception 2, age 65 and over. Except for married filing separately, the filing requirement limitation is increased by the additional standard deduction for being over 65, but not being blind. Okay, so being blind and being over 65, they get a standard deduction on top of the usual. Okay, but the filing threshold is only impacted when the taxpayer is over 65, not for being blind. Okay, this is also very examinable, but very rarely happen in real practice. So 2,000, you already seen this, 2,000 for head of household, and single, and then 1,600 for those who are filing married. So those are filing jointly, and QSS. Don't worry if you don't get this one yet. There's a demonstration in the following slide. Okay. Now, so blindness increase your standard deduction, but it does not increase your filing threshold. But age does. Okay. That asymmetry is exactly the kind of thing an exam question is built on, and it is in the next drill that we're going to be covering. So on the right, the add backs we met on was it Tuesday? Excluded gain on the disposition of a personal residence and excluded foreign earned income. That will be added back to determine filing threshold. Also, it really happens because not every year that a taxpayer sells his or her primary home, right? So, and one more in the box, which is the key to ROSA. Gross income does not include social security benefits or the pension, unless one, the taxpayers are married filing a separate return and live together at any time during the year, or two, one half of the social security benefits plus other gross income plus any tax exempt interest exceeds $25,000 or $32,000 if married filing jointly. So in the case of Rosa, she's only receiving a social, right? But it's not absolute that she's not required to file, because guys, it's also not correct that social security benefit is not taxable. I've had several taxpayer before, because I would handle review with a client, right? So we would hop on a Zoom call and I would walk the client through the tax return, and the tax client would say, why would I be taxed on the social security income when that was already taxed when I earned that income? So it's as if they're being double taxed, because the pension that they're actually receiving was from the tax that they paid when they were when they were working, right? So some would feel that they're double taxed, but that's how it works, right? So at a certain point, when the social security benefit reaches a certain point beyond the threshold, that social security benefit can also be taxable. Okay, so remember that not all the time that social security benefit is tax exempt. There are cases that you can be taxable, and we'll cover the computation in more slide. But in this particular instance, I just want you to remember that not all pension is tax exempt. Okay, makes sense so far? All right, now, so this is what I'm talking about. You can actually get better understanding with this table. Okay, so for taxpayer A, he is single, the age is 40, he is not blind, and his gross income is 15,000. So the threshold here for single filers is 15,750. Therefore, he is not required to file. Okay, he is not required to file, but can he file? Yes, he can, especially if he has tax refund. Okay. Now, situation letter B, single, 67, not blind. Okay, gross income is 17,000. Okay, so remember 67 years old, that's above the 65-year-old threshold. Okay, so on top of the 15,750 standard deduction, he also gets 2,000. Okay, so now his filing threshold has gone up to 17,750. In that case, he is not required to file. Make sense? Because that 2,000 is on top of the standard deduction because of his age. All right. Now, letter C, single, 40, blind, right? Single, so he gets 2,000 extra, okay, in the standard deduction. So his gross income is 16,000. But because he's blind, his blindness does not lift his threshold. He still is required to file. Okay, although he would not be taxed, but he is required to file because in this case, his gross income is 16,000. His deduction is 15,750 plus 2,000. Okay, so he's got more deduction than his income. But because again, blindness does not increase the amount of threshold. Okay, this is also very examinable. So it does not increase the threshold amount, therefore he is still required to file. Okay, it's a bit tricky, guys. It's a bit tricky, but one thing that you need to remember is that blindness, it just does not lift the threshold for filing. Okay, so again, on this situation, effectively the taxpayer is not gonna owe any tax, okay, because he's got more deduction than his income. But it does not mean to say that he's not required to file. Make sense? All right. Now, situation of 4, married filing separately. Age is 45. Gross income is 600. Okay, is he required to file? Yes, because the filing threshold for married filing separate filer is $5. Okay, and finally, single taxpayer, age 30. The gross income is 9,000, of which 5,000 is self-employment earnings. Okay, so net, his gross income, which is his active income, is 9,000, but his self-employment income is 5,000, which is far more than the $400 threshold. Therefore, he is still required to file. Okay, although if you look at it, his income is only 14,000, so much lesser than the standard deduction of 15,750, but he is nevertheless required to file. Okay, makes sense so far? Okay, these are the things that you need to remember because this can be asked of you when you are interviewing for or when you're doing a discovery call for a prospect client. Okay, would you be asked this question when you're applying for a job? Most likely not, because this does not happen most of the time. Okay, we just need to know this because again, what we're doing here in this course is also preparing you for an exam. Okay, not the review yet, but these are things that you ought to know so that you have full understanding of the why behind the how in tax preparation. Okay. All right. So let's not spend a lot of time on that. Let's just move on to the next slide. Now, on the Marcus's file, there are 3 potential filers. Okay, 3 potential filer. One, of course, is Marcus, who has self-employment earnings. We don't know that yet. But in the coming days, we will be able to know what his income situation is like. But remember that because he's self-employed, should his income exceed $400 on that self-employment, he would be required to file. Okay. Now, Sophia, which is not going to be on his return because Sophia will have to file her own return. For Marcus, his threshold for him as a head of household is 23,625. But again, remember, he is self-employed. Okay, so his threshold is effectively $400. Make sense? So if Marcus was not self-employed, and we already know that he's going to be filing head of household, his threshold would have been 23,625. Okay. Now, next taxpayer here is Rosa. Rosa is 71. Would she need to file her own tax return? So let's look at her situation. Her only income is 14,000, and that is coming from a Social Security benefit. Half of 14,000 is 7,000, plus there's no other income. Now, the threshold in this case is 25,000 because she's filing separately, or she's filing a single. So 7,000, which is half of 14,000, is well under 25,000. So effectively, Rosa is not required to file. Okay, Rosa is not required to file again because her filing threshold is way below 25,000. All right. Now next, Elena. Elena is 16. But would she need to file her own tax return? So let's look at her case. Remember, she's also a dependent because she's only 16, right? She's a dependent of his parent Marcus. Elena earns 700, okay, as an active income. But she also has an earned income or a passive income of 32,000 in a form of interest. So that triggered her filing requirement because the threshold for unearned income is only 1,350, okay? Which is over by 1,850. Okay, so we'll talk about the 1,850 I think in the coming slide. So her own standard deduction is capped, which we will compute in part 2. Her interest also raises the kiddie tax. That is a discussion that we'll have tomorrow. Okay. So let's sum it up. I know you have questions. I'll come back to your questions after. Okay. So Rosa is 71, single, and her only income for the year is 14,000. This will test your retention, guys. So 14,000 of Social Security benefits. She had no tax withholding. Is she required to file a return? Is it A? Yes, 14,000 exceeds 15,750 single threshold once the age 65 add-on is applied. Not really. It can be, but that's not going to be the case for her. And B, yes, everyone over 65 must file regardless of income. Not true at all. Letter C, no. Half her benefits plus her other gross income is well under 25,000. So the benefits are excluded from gross income. This is likely the correct answer, but let's find out letter D. It says no, Social Security is never included in gross income under any circumstances. That's not true. Okay, that's not what I'm saying earlier. It's not true that Social Security is never included. There are cases, and that depends on the amount. Okay, so the answer here is letter C. Good job, guys. I saw a lot of, or actually all of you answered letter C. So you were listening after all. So we still have 30 minutes. Now let's continue. Our 2025 standard deduction amounts. Again, you don't need to memorize this because the software will do it for you. And then I'll just read through the basic. Now you need to understand the additional for each of the filing status, okay? If there's blindness or if the age is above 65. So for married filing jointly, if one is above 65 or one is blind, the additional deduction is only 1,600 for each taxpayer, okay? So if both are blind or both are 65, they get 3,200 on top of the 31,500, okay? Now for qualifying surviving spouse, the same thing, because effectively QSS is same as married filing jointly. Now for head of household, there's only one taxpayer, right? There's only one taxpayer, same with single. So head of household and single, they both get 2,000 on top of their standard deduction, okay? So maximum 2,000. But for married filing separately, although there's only one taxpayer, but he only gets 1,600 of additional deduction. Not 2,000, but 1,600. Why? Because the other married filing separately taxpayer is also getting 1,600. So the two of them are actually getting 3,200 combined. Okay, make sense? So these are just for the additional deductions. Right, the additional standard deduction, an individual who has attained age of 65 or is blind is entitled to the additional amount. And we already know the definition of blind. I'll just let you read that. Entitled if age is 65 is attained before end of the tax year. Okay, so even if it's December 31, for as long as she's 65 or he or she is 65 at the end of the year, then they are entitled to that deduction. Okay, so not entitled if the individual dies before attaining 65. So if the taxpayer happens to be taken out of the picture before the deadline, before the year, then that would not be an option. That's not going to be an additional deduction on the tax return. Right. A person who becomes blind on or before the last day of the taxable year is entitled to the amount. Okay, so it's as if he was blind the whole year. Once qualified, the standard deduction is allowed in full. It is not prorated during the year. Okay, so if the person became blind fourth quarter, again, there's no proration that's going to happen. He's entitled to the additional 2,000 for as if he's blind for the entire year. An individual who has reached 65 and is blind is entitled to 2 additional deductions, okay? So if it's married filing separately, he's blind and he's also 67 years old, he gets how much? To test your understanding. If someone is blind and 67 years old filing separately, how much does he qualify as additional deduction? Guys. 4,000. Good job. It's 4. So actually, there's one example there. So Mike, fourth, head of household, 68, and legally blind. So he gets 2,000 each. That means he's got total 4,000, and total standard deduction became 27,625. Now, Adam and Betty Washington, they're married filing jointly. Both are 65 or both are over 65 and both are legally blind. So that's 1,600 times 4. Not 2,000, but 1,600. So total deduction now is 37,900. And then Johnny Watson, head of household, supports her 72-year-old mother. So basic as a head of household is 23,625, and she may not claim the additional deduction for her dependent mother. The additional amount belongs to the taxpayer, not the dependent. So Johnny Watson, he's not 72-year-old. His mother is. So he is not entitled to the additional he is not entitled to the additional deduction. Okay. All right. How many more slides? So we're halfway through. All right. So in this example, let's cover, or in this slide, let's cover 5 examples as to how much would be the additional deduction. So for a single filer, age 42, not blind, so he's got 15,750 with no additional deduction. For situation B, single, 66, not blind, so he got 2,000 extra deduction. For head of household, 68 and blind, so he got total of 4,000 additional deduction. Now, MFJ, one spouse is 70 and neither of them is blind, so they only get additional 1,600 deduction. For FMJ, MFJ, both are above 65 and both are blind, so they got a total of, how much is that? 2 times 2, 64, correct? So a total of 6,400 additional deduction, okay? So I hope that's clear with you guys. This is purely theoretical. Again, no need to remember because these are going to be covered by the tax software already, but it's good to know. One reason is that you understand the numbers, okay? Because if you don't understand the numbers and you're just inputting numbers in ProConnect, you would again fall under my situation before where you're inputting numbers like an encoder and you don't understand how the numbers come about. Okay? If no one told you this information. Agree, Janelle, JR, Christina, who else? Jade. right? These are people who have been working with me doing tax preparation, but they're doing encoding. They don't know these things, right? Because I never explained this to them because we didn't have the time back then. Now we do. All right, so one more standard deduction rule, and it is the one that finishes Elena's analysis. The basic standard deduction for a child under 19 or a student under 24 who can be claimed as a dependent on another individual's return is limited to the greater of $1,350 or the earned income for the year plus $450 up to $15,750, which is the applicable single standard deduction. And earned income for this purpose does not include dividends or capital gains from the sale of stock. So there is a floor of 1,350, a formula in the middle of earned income plus 450. Okay, her earned income is $700, so earned income plus the 450 is 1,150. The floor is 1,350. Greater of the two is 1,350. So her standard deduction is $1,350, not $15,750. And now read the box on the right because it settles the filing question on both limbs. Her gross income is $3,900. 700 plus 3,200 against a standard deduction of 1,350. That is trigger 3 on our gross income that we covered earlier. And her unearned income of 3,200 exceeds 1,350. So that is trigger 3 again. And on the second limb, so she must file her own tax return. And tomorrow we will cover more about that interest because that will be subjected to a kiddie tax. So I would want you to understand this slide by going back to how much the income of who's this? What's her name? Elena, right? So her income is 700 plus 3,200, a total of 3,900. Now, we already settled it. She is required to file. Why? Because her income has exceeded, her unearned income has exceeded 1,350. Okay, so she is required to file. Now, the next question is, how much is her deduction, right? Will she be taxed when she's single, technically, right? Because she's only 16. And for single filers, the standard deduction is 15,750. Does that mean that Elena is not going to owe any tax? That is not the case. Why? Because she is not filing a regular return. She is filing a return where she is claimed as a dependent. Okay? So she is not filing a regular return. Therefore, her standard deduction is only the greater of 1,350. So that 1,350 is the minimum or the threshold for unearned income, right? So what the greater of that amount versus her earned income plus 450. Okay, so and that's up to 15,750. Okay, because in this case she has both earned income and unearned income. Okay, if she only had earned income, her deduction could be up to 15,750. But then again, she has unearned income. Okay, so in this case, Elena's deduction on her return is only 1,350. The reason for that is her earned income of 700 plus 450 is only going to amount to 1,150. But the 1,350 is greater than that. Therefore, when Elena files a return, her income or her taxable income will be the 3,900 active and passive income minus the deduction of 1,350. The rest will be taxable. Make sense? And again, you may ask, why is that the case? Because Elena is not filing a regular return. She is claimed as a dependent. Okay? Make sense? All right. Next. All right, so let's just check your retention. Elena is 16, is claimed as a dependent by her parents. She earned 700 from a weekend job and received 3,200 of interest. What is her basic standard deduction for 2025? We already just covered that, okay? So how much? That is letter C, 1,350, which is again the greater of the 1,350 or the earned income plus 450. This one, guys, the tax software will not analyze for you. You will have to analyze this, okay? I have not seen, because it does not happen regularly, okay? So all others, you can memorize because those are regular return. But a dependent tax return is unusual, irregular, so you have to be very familiar because the software will not do the computation for you, okay? Make sense? All right, let's see what we have on the next slide. I think this is the time that we are going to demonstrate this on the on the browser. So, all right, so let's prove all our deductions, okay? Let me open ProConnect. Are you still seeing my screen? All right, so we still have 15 minutes. And I don't think we would be able to finish today because apparently we only have 15. But let's try the case of Marcus, okay? We'll try to play around his filing status just so you understand the impact of those threshold to his tax return. So I think last session I already showed you the standard deduction when we change the filing status, right? Is that right? Do you still recall that? So I don't have to do that, right? Let's do some other exercise instead. All right, so first we have to recall that Marcus is a self-employed individual, okay? And because he's self-employed, again, what is his filing threshold? Type it in the chat box, guys. What threshold covers him? 400. Good job. So right now, we are seeing that the filing status for Marcus is head of household, okay? And his standard deduction is 23,625, okay? We have not indicated any income for him. But what if Marcus has an income of $300 from his self-employment? Okay, so where do we go to input business income? Is here. So under business income, Schedule C, as far as ProConnect is concerned. Okay, so for example, just for the sake of expediency, for example, Marcus earned 399 or maybe 350. Okay, so let's refresh the form. So 1040. All right, so 350, he did not generate even a Schedule C on his return, right? He did not generate a Schedule C. But let's see if we change this to 400, right? Still not. Let's say, because 400 is a minimum, right? Let's say 450. Okay, still not. Maybe 500. Am I doing something wrong with here? Okay, sorry. I was doing the wrong thing. This is principal business or profession. What is his profession again? Is a mechanic, was he? Something like that. Let's just change that later on. So we have to input his income in here. Sorry, I was wrong the whole time. I thought it was gross receipts. So gross receipt, for example, of 350. Right? Well, let's say no income, right? IT contractor, I'm sorry. Let's change that later. All right, so 350. Now the form automatically attaches a Schedule C, right? You see that here? It automatically attaches a Schedule C. And you have here, I'm sorry, he's an IT contractor, not a mechanic. But you see here, his income is 350. But notice there is no tax, right? He will not be assessed any tax because he's got more taxes than, sorry, he's even got deductions here, and his standard deduction is way more than the income, right? Now, see if you change this to 400. Let's see what happens. All right, not, let's say, because 400 again is a minimum. Let's change this to at least 450. All right, so with 450, he is now subjected to self-employment income, right? That's why you see Schedule SE, right? Schedule SE breaks down how much he owe as a self-employed individual, which is the 15.3% of his total his net income in the business. Okay, we'll tackle more about self-employment income in the coming slide, but this is just the point that I'm trying to make. Why did the IRS set 400 as the minimum threshold for filing for a self-employed individual? Because after that amount, the taxpayer will be assessed a self-employment tax. Okay, so that's the whole point. And that self-employment tax, see here, that's his total tax, $64. He is not due anything because he has got a refund from last year of hundreds of, sorry, this is an earned income credit. This is something that we'll cover as we go along. But focus your attention here, 64, he owes $64, right? At the 450 gross receipts. But if we change it back, if we change it back to say 400, all right, it's giving up on me, sorry. Let's see if someone's following on their end. If you change it to 400, do you see any tax due? It's not working. Oh God, sorry. Let me go back to, where is my review return? Sorry, guys. So no tax due, right? Because of 400, but you go past 400, he's now assessed self-employment tax. That's the point, guys. That is the point why the 400 is set as a threshold for self-employed individuals. Make sense so far? And again, this is why you need to understand what you're doing. Because if nobody teach you these things, you will end up as an encoder or as an entry-level tax preparer rather than someone who understands what you're doing. Okay, and you encounter this a lot. Self-employed individuals, there's a lot out there. 1040 filers with Schedule C. Okay. All right, this makes sense to you, Janelle, JR, Jade, Christina. Sorry, I'm roll calling your name because again, guys, these are people who already are doing tax preparation, but I know for a fact that they don't know these things because I have not shown them when I was training them before. Okay, so, and that was my case back then too. I didn't know these things. I was already doing tax returns. I didn't know these things until I studied for the EA exam. All right. Let me. We still have 7 minutes. Okay, so let's just change, for example, the case of, so now he's 83. What would be his date of birth if we say his age is 66? Guys, type it in the chat box. So let's just assume he's 65 years old. Or 66 years old. What would be his date of birth? 1964. Okay. So try to change that from your end because my software is, I don't know, crashing. It loads very slow. I don't know what happens. But when you refresh it after you change the date of birth to 64, you would notice that he will get 2,000 on top of his standard deduction. Okay, 19, right? So let's go back. No, he's not age. Does he? So let's just say 1960. Okay, 1960. So he has to be above 65. Oh my God, what's wrong with, okay. So this is a problem with ProConnect. Sometimes it loads really slow. But if you're using a tax software that's a desktop application, it's rather fast. You don't see refresh form. You may have to expand your browser vividly. I don't know what's wrong with mine. Okay, this one. But did you see it from your end? Do you see that there was an increase of 2,000 after you changed the date of birth? Can you guys type in yes from your end if that was the case for you? Just my, I don't know, it could be my computer that's not cooperating. Yes, okay, good. Then try changing or updating his return to say he is blind. Okay, try the tick mark where Waikiko is 6,000. Maybe because you're 6,000 because you're filing jointly. Kiko, your filing status probably is joint, plus you have the taxpayers as blind. So check on your filing status, Kiko, as well as the details of your taxpayer. So make sure that you have head of household as a filing status over here. And then you tick mark blind. Okay, so if you tick mark blind, he would get extra 2,000, right? Because 2,000 for the fact that it's above 65 plus 2,000 for being blind. Okay. I just wish this one refreshes pretty fast, but it's not. Okay, so for those who were able to update, did it change your standard deduction to 4,000 more? Yes, from Johan say yes. Right. So that's the importance of above 65 and blindness, okay? And because he's filing head of household, he's got 2,000 each, okay? But if he was married filing jointly, he would only be able to get 1,600 for being above 65 and 1,600 for being blind. Okay? Makes sense so far? I know that my software is not cooperating. It takes a while for it to load. Annabelle's also 6K. Like on top of it is 6K. That's not possible. There's something off with your selections. Right? So what you should see, for those who are getting 6K, okay? Because 6K, that would mean that may mean someone is included in your rate. So see, on my end, I have 25,625. Oh, sorry, hold on. So additional deduction or schedule 1A, line 38. So that's 6,000. Look at schedule 1A here. So 6,000. And once again, 6,000. So subtract line 34 from line 6. All right, maybe they have changed it. This may have already updated. Maybe you can research on this. Let's see schedule 1. So if you have a valid social security number and were born January 2, 1961, enter them. Okay, so this is probably one of the changes that was introduced in 2020. I didn't know this. So see, 6,000 on line 35. Because the EA material that we're using is prior to 2025. So my bad. I'm sorry, guys. So we'll research more on this. It's probably 6,000 now, right, for being blind. Can you do a quick research? Let's do that together. ChatGPT. Effective 2025 tax return. How much is the additional deduction for taxpayers above 65 and blind? So same thing for age above 65. Nothing has changed, but let's see. All right, so don't confuse additional 1,000% with the new 6,000 senior deduction introduced for 2025. So there is an additional for 2025. A qualifying taxpayer age 65 and above may also receive up to 6,000 of additional senior deduction, subject to income phase out. Okay, so it depends on the amount of income. This could be phased out. Maximum though is 6,000, so it could be lower than 6,000. So clearly that shows in 2025. I had no idea. I didn't have any taxpayer that was blind. And again, it's not very common, guys. It's separate from the age 65 standard deduction. So that's on top. But what you see on the 1040 should still be, how much is the deduction here? 25,625, which is, how much was the standard deduction for HOH? That's 21, right? 21,625 or 23,625. So he only got, all right, so he only got 2,000 for being blind, and then being above 65, he got 6,000. All right. Because let's say if he was not blind, this thing, this would go back to 203605. All right, so we're 3 minutes past our schedule. So let's just finish this part, guys. All right. So he's not blind, but he still got 25,625. Let's refresh this. All right, so apparently he's not getting any benefit for being blind now, because it did not change. I got 27,605 for blind, plus 6 gave. My SD is 27 for both blind and 65. Why was was mine not change? Okay, so this is Marcus, right? 1960, not applicable. So mine, after clicking blind, should refresh to 27,625, just like yours, guys. So yours are updated. All right, now it's updated. So 27,625. I believe there's just a lag in the internet that's causing it. But 27,625, this is 2,000 for being over 65 and 2,000 for being blind. Plus effective 2025, we get 6,000 on top of the 2,000, the additional deduction. Okay, let's just test the system. Let's click untick blind again. So it probably is just a matter of refreshing your software, guys, for those who experience the same thing as I had earlier. So see, I untick blind, it went back to 25,625. Okay, so it should, again, when you change the date of birth to reflect that he's above 65, and you also tick blind, the standard deduction should be 27,625. Okay, if it is not, close your browser, reopen it. Okay, if it's not, close your browser, reopen. Something is wrong with the software not refreshing it. Okay, so it happens because ProConnect is a cloud-based software. So sometimes when you refresh the second screen, it may not pick up from the main screen, because like this one I'm showing you right now, this is an extension screen, right? This is not the main screen. So maybe you'll need to close it and then click on review return again, and then refresh it from there. Okay. But the point is 2,000 plus 2,000. Okay, that should sink in by now. Okay, but we had a brand new information about the 6,000 earlier as well. Okay, so that about wraps it up. If you have questions that we're not answering because of the interest of time, we will be answering questions first 5 minutes, or for 5 minutes tomorrow. Otherwise, drop your questions in our Google Sheet, okay, so that we can answer it, and maybe some of you have the same questions, you can just refer to those. All right, so the 6K is from 2025 to 2028 only. So that was additional benefit introduced by Trump, or at least the Trump administration. All right, so are you still okay, guys? You think this was too much information today, or not really? It was good, right? Just few information. The brain's not bleeding that much. Great. All right, so great discussion. Thank you. We'll continue continue to make some actual demonstration in the tax software, and then we'll continue with the rest of the slide tomorrow, because I really hope to finish this by tomorrow, like the module 1, so that we can continue, or we can start on Wednesday the discussion on income. Okay. All right. So play around your software. Try to change the status from, or the age, the filing status, and then also when you have the time, start to build a return for Rosa and Elena. Okay. Try to build, especially for Elena, because we will need to file for her. That because we already know that she is required to file. Okay. Try to build that in advance. Okay. All right. So prayer closer today is Jade. Right. Jano or Jade? Oh, Jano. Okay. Go ahead, Jano. If you can close today's very productive session with a prayer, please do so. The floor is yours. Is Jano with us? Go ahead, Jano. It's already 9:09. I'm hungry. Just kidding. Or anyone who can take the closing prayer from Jano? Looks like she may have some issues. Or can we hear Jano? She's unmuted now.
You hear me okay now?
Yeah, better now. Go ahead, Jano.
Okay. Let us put ourselves in the holy presence of God. In the name of the Father, and of the Son, and of the Holy Spirit. Amen. Heavenly Father, at the close of this gathering, we bow our hearts before you in thanksgiving. Thank you for the gift of fellowship, for the wisdom imparted, and for the strength you have given us to learn, reflect, and grow together. Truly, your presence has been with us, guiding our thoughts, inspiring our words, and shaping our actions. Lord, we ask that the lessons we have received today may not remain in our minds, but take root deeply within our hearts. May they shape our character, strengthen our faith, and empower us to serve others with humility, compassion, and love. As we step out
What
into
if the
world,
career
grant
you've
us
been looking
courage to
for
face
starts with the
challenges
right
with
skills?
confidence, wisdom to make sound decisions, and
Learn the
patience to
foundation of
endure
modern
trials
accounting
with
through
hope.
U.S. bookkeeping.
Remind us always that when
Build confidence in communication and stand out in the global workplace.
Entrust all our plans,
Gain practical
dreams, and
U.S.
burdens
taxation
into your hands, knowing that your will is perfect and your timing is sure. May we leave this place renewed in spirit, strengthened in faith, and committed to living lives that honor you. Let our words be seasoned with grace, our actions be filled with kindness, and our hearts overflow with love. In Jesus' name we pray, amen. In the name of the Father, the Son, and of the Holy Spirit. Amen.
All right. Thank you guys for today, and I'll see you guys again tomorrow for our 8 million Tech Talk joiners. We're doing live every 7 to 9 p.m. If you would like to join us in our US tax prep discussion, and if you want to learn more, follow us on this page. We're also on TikTok and in Facebook. Thank you guys for today. All of you have a good night. Bye-bye.
What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program.